Madam Chair, we are live on YouTube.
Thank you. All right, it is 9 o'clock, March 18th. Let's begin this meeting. Shayna, could you do a roll call, please?
Jenny Moore,
Present.
Pilar Rodriguez, Courtney Bechtel, Nathan Douglas,
Nathan Douglas, present.
Matt Glaves, Ed Keenan,
Here.
Jerry Romero,
Here.
Rodney Riles,
Here.
Stephanie Wagner.
Here.
Madam Chair, 6 board members are present and 3 are absent.
Great, we do have a quorum. Board agenda item number 2, do we have any public comments?
No, ma'am.
No public comments. Perfect. Okay, I hope everybody got the board packet and has a chance to look over the agenda. Any discussion for changes or addendums? Having none, can I get a motion to adopt the board minutes from January 21st?
I'll make that motion.
Motion by Ed Keenan, second.
Second.
Second by Stephanie Wagner. Call for a vote, Shayna.
If you are in favor of the motion, say aye. If you're opposed, say nay. Nathan Douglas,
Nathan Douglas, aye.
Ed Keenan,
Aye.
Jerry Romero,
Aye.
Rodney Riles,
Aye.
Stephanie Wagner.
Aye.
Madam Chair, 5 board members are in favor of the motion and 0 are opposed.
Perfect. Motion carries. Thank you. Before we go to investment consultant report, I want to welcome Shirley Hayes as our new executive director. Thank you, thank you, thank you.
Thank you.
Investment consultant report, agenda item number 4. We've got a lot of things to talk about. So at this time, I'll turn it over to Stephanie. If you could tell us what's going on, and then we'll call on John for his presentation.
Yeah, we met last week. John, as usual, gave a fantastic overview, and I think at this point we'll turn it over to John to give a high-level overview to the board. But there's no concern. All is in great shape. John, with that, if you want to present.
Perfect. Thank you so much. I'm going to go ahead and try and share my screen here so that everyone can see. Make sure this pops up.
Yes.
Okay, so we got you here. Perfect. All right, so what I'm going to do is go through this, relatively quickly. As we mentioned, the investment committee got together last week, reviewed our full quarterly report, also discussed the performance update that we had through February. And so let me just get right to it. So this first page Mike Welker puts together for all of our clients, really the goal here is kind of twofold. One, and then second, to give you a bit of an update on what's going on at the firm. Obviously you see we ended 2020 at approximately 100 billion in client. Focus on this top right chart here was really a huge rebound in global stock markets. And really the rebound that we saw in the fourth quarter was effectively the second week of November through the end of the year. Obviously we had the election take place in early November, and then shortly thereafter, we got the notice of the 2 vaccines gaining FDA approval. And then that obviously started the vaccination process later in 2020. But what that really allowed for was a kind of a reopening trade, essentially. And what we saw respond were typically the more cyclical areas of the market that really do well coming out of a recessionary period, especially areas of the market that tend to rely on good, solid economic growth to recover. This is a little bit of a change to what we saw carrying markets from, let's call it April 1 through September 30th, which was a lot more organic growth companies, the consumer, technology, healthcare companies, which had really led the way. We saw those kind of hand over leadership to some of the more cyclical areas. And so amidst that, what you saw was a really strong appetite for risk throughout the fourth quarter. So you see that within the United States with higher risk small cap stocks up 31% compared to large caps or the Russell 1000 only up 13.7. And then you saw a similar phenomenon internationally with emerging markets up 20%, while the EFA or developed international markets gained around 16%. I would point out this gain for the Russell 2000 was actually the strongest quarterly gain for that index since its inception in 1979. So, pretty unprecedented, I guess you would add maybe that unprecedented return to all the other unprecedenteds that took place in 2020. Carrying that risk appetite into fixed income, you really saw, again, corporates continue to lead the market in the fourth quarter of last year, up 3%, while Treasury inflation protected securities, or TIPS, were also a strong gainer in the quarter, up 1.6. TIPS really responded to increasing inflation expectations once the Federal Reserve obviously took action to lower interest rates, to pour all sorts of assets into the markets to make sure that there was ample liquidity. But then they also moved away from their kind of stated 2% inflation target to a range-based inflation target of 2 to 3%. And really this has led the bond market to anticipate, kind of much more aggressive inflation. This is something that we've kind of expected really since the financial crisis in 2008, 2009. Haven't seen it come to fruition, but we have periodically had these kind of spikes in inflation expectations. And that's really what we saw in 2020. I would just point on page 5, again, something that we'd seen really throughout the year was this heavy outperformance of growth relative to value. You see that in the 1-year chart at the bottom, with growth outperforming by roughly 30%, whether you're in large cap, mid caps, or small caps. The fourth quarter, though, we did see a little bit of a change with value pretty significantly outperforming across the market cap spectrum. And again, this was due to some of these more cyclical areas of the market. Best exemplified here when you look at some of the sector performance, with energy up 28% for the quarter, financials up 24% for the quarter. But as you would imagine, with the volatility that we saw in energy, even with a 30% gain in the fourth quarter, energy in total was still down 30% for the entirety of 2020. And you compare these gains to what we saw out of some of the sectors that had really been leading the markets, technology up 13%, consumer up 13%. All told, it was a pretty hard quarter not to make a lot of money in the stock market. But again, what you really saw was those value managers that seemed like they couldn't get out of their way, finally kind of starting to come back to the forefront and really lead some performance. What I would just point to on page 7 is that, when you think about the entirety of the year, it really was some fairly narrow stock leadership that really drove markets last year. It was these fan mags, the Facebook, Amazon, Netflix, Microsoft, Apple, Google. These stocks really dominated the annual return. And then you also add Tesla to that mix. So Tesla was added to the S&P 500 kind of mid 2020. And during the year, the stock really just exploded. So you see up 740% for all of 2020. Those gains actually continued into 2021. And at one point in January of this year, Tesla was the world's largest automaker by a mile. When you actually added the next 9 automakers together, Tesla's market cap was still larger than all of them. So prices kind of gotten a little bit aggressive in Tesla stock. That's for certain. The one thing I was just going to point out internationally that we saw in the fourth quarter, and we really saw it for the entirety of 2020, was that we finally saw a little bit of a change in the currency market, in that the US dollar, which had been appreciating pretty relentlessly relative to foreign currencies since the financial crisis, finally stopped and really started depreciating relative to these foreign currencies. Where that's important for our portfolio is that we do maintain a fairly significant target allocation to non-US stocks. And you see here for the EFA for the quarter in local currencies up 11%, but because the dollar weakened, that added to our return. And so it grew from 11 to 16% for the quarter. Not quite as pronounced within emerging markets, but we also saw a gain there. Ultimately, where this really helps us is that it just adds a little bit of a tailwind to our potential returns. So if we can see the dollar weaken for the next year or two, that just adds to our returns internationally. And typically, that's kind of the movement that we see, the dollar appreciating over a range of time and then starting to depreciate over time. Let me stop there and see if there's any questions on kind of the market in Q1. Okay, great. So from there, let me take you to page number 12 and just kind of look at asset allocation. I would say by and large, we're really in line with all of our long-term targets. You see here MLPs were kind of an area that we moved out of in 2020. A little bit of some underweight and overweights across some of these areas. And then a lot of that's just due to timing of, whether it was real estate commitments or our pending commitment and drawdown into IFM infrastructure. We're essentially kind of right in line with where we want to be. We also made some drawdowns to kind of rebalance the portfolio at the end of the year to make sure that we weren't overexposed to the equity market. So in terms of asset allocation, no action items for the committee here. On page 15, I just wanted to point out, when you look at the bottom line here, our fiscal year to date cash flows, you see we started the fiscal year at about $122.5 million, inflows to the system of roughly 170,000, and then fees of 190. But then we were able to offset, kind of any outflows with a tremendous gain. And obviously the timing of our fiscal year to date has been very good, in terms of dating back to September 1. So in terms of total gain, we're right at around $12.3 million in gains for the fiscal year to date through December. And that pushed us up to about 135 million at the close of the fiscal year or fiscal year to date, December 31. On page 16, when we look at our total retirement system performance, you see, just how powerful of a quarter it was. So, the retirement system was up 12%, well ahead of our policy index, now outperforming fiscal year to date, and then also outperforming over the 1, the 3, the 5, and then narrowing that gap in terms of underperformance on the 7-year. I think a lot of the allocation changes we've implemented, the manager changes are really starting to bear fruit for us. And that's why we're starting to see the performance relative to benchmark and performance versus that peer group doing well here. I think it's also important to note that when you look at this quarterly performance, remember one thing that we did in 2020 was make a conscious effort to slowly take some equity risk out of the portfolio. I think it would be one thing if we had just kind of been as aggressively allocated to equities. Admittedly, our absolute returns probably would have been a little bit higher, but I think it would have positioned us pretty poorly if we had seen another pullback late in the year. And so I was pretty encouraged to see us not only kind of capture the returns in the market, do as well as we did relative to our peer group, kind of with this rally in the fourth quarter, but doing it all with less equity risk than we would have had, let's say, a year ago going into this period. Domestically, I would say, all of our managers delivered pretty strong performance. Really our one underperformer for the quarter and for the year has been ClearBridge. A lot of this just gets back to the fact that they're just simply not as aggressive of a growth investor. So what that has meant is they've been a little bit underweight Apple, which was up 80% in 2020. And they also didn't own Tesla. So it was really more of a function of what they did not own as opposed to any real problems with companies that they owned. Now that we're starting to see a little bit more volatility in the big cap tech space, I think this is exactly the kind of environment that ClearBridge would be looking for to start generating some outperformance. And we're starting to see that incrementally. So still very confident in them as a manager, and obviously it's an easier problem to have when your growth manager is only up 31% when the market's up 38%. So again, not that we're giving them any type of free pass, but I certainly understand why they've underperformed, and we still have a lot of conviction in them as your large cap growth manager. From Clarkston's perspective, a little bit of underperformance this quarter. I think that was twofold. One, we did see kind of lower quality companies really dominating performance in the small cap space. GameStop probably best exemplifies that, especially with their outperformance in 2021. It was a lot of these low debt, high price companies that really dominated performance, as well as regional banking stocks, which started to outperform later in the year as interest rates start creeping up. Those are areas that Clarkston's generally avoiding. And they also still have, kind of a roughly a 10 to 12% cash position in that fund, just being a little bit skeptical of market valuation. So a little bit of underperformance for the quarter, but as you see, almost double the index since we hired them in a first percentile performer. Where we really got the growth kick was from Jackson Square. You see kind of a first percentile for the quarter. So again, this combination that we've instituted with Clarkston and Jackson Square continues to pay results. In Jackson Square, early in the year had seen some underperformance for some of those online retail companies like the Stitch Fix of the world and Farfetch. And those really the second half of 2020 have continued to lead their performance. Internationally, this is an area that's continued to be a source of strength for us. And importantly, we're starting to see some strength from the balance that we instituted by adding the value manager in Oakmark. If you recall, they underperformed pretty significantly in Q1. A lot of their more economically sensitive companies like a Glencore, the world's largest mining company, underperformed, but then rallied significantly for the remainder of the year, as did some of their European financial services. And that was supportive of Invesco growth, which didn't do quite as well in this more value-led market. It was really just a couple companies in China that just didn't quite keep up with the market that hurt them. And then we've got Wells Fargo, who's been a very consistent performer for us within emerging markets, doing quite well. Again, just kind of incremental stock selection across their portfolio. Actually did this while being underweight energy, which was one of the best performers in the emerging market space. So again, international continues to be a good source of strength for us on a relative performance. And then within fixed income, I would say we've got our two very plain vanilla investment grade managers, Garcia Hamilton, continuing to kind of give us market performance in the fourth quarter. And you see, importantly, year to date, both significantly outperformed that primary benchmark. A couple of just kind of recurring themes, overweights to corporate bonds, which have continued to perform well. And then with Garcia Hamilton, they've been kind of underweight interest rate risk for much of the year, which really helped propel them forward. And as you see, since inception, getting nice incremental outperformance from them. Where we did add a little bit of risk to fixed income was with PIMCO Diversified in September of last year. They're our manager that takes on exposure to areas like emerging market debt, high yield bonds. Again, all these higher risk areas in fixed income have done extremely well the second half of the year, and that's really propelled them forward. I wouldn't say we timed that allocation perfectly. If we had done that maybe April 1 or May 1, it would have been perfect timing. But it was really good having that in place to support the very plain vanilla investment grade allocations within Garcia and Richmond. And that allocation has continued to bear fruit into 2021. Our two alternatives, Morgan Stanley and BlackRock, both had good absolute quarters. From Morgan Stanley's perspective, you see that year to date, they're now up 2.26%, but really the entirety of their return has come within kind of the last, call it 4 or 5 months of the year. Good first quarter of the year, appraisals suffered in Q2 and Q3, especially retail and office related holdings. But starting in the fourth quarter, we actually started to see appraisals come back the other way. I would say, when you look at managers today, you're seeing more and more managers kind of moving away from the retail, lightening up some of their office space, trying to build out industrial. Morgan Stanley has been kind of ahead of the curve on both of those fronts. And that's why you see since inception them delivering some pretty heavy outperformance relative to that benchmark. So they really continue to be probably the best performer that we have within the core real estate space. And then we complement all that with BlackRock, which is our manager incorporating both equity and fixed income. You see for the quarter up 6.5%, a little bit behind that MSCI World benchmark. I think a lot of that was due to strength in some of the growth related companies that are a big part of that index. Now that we've seen growth start underperforming a little bit here in 2021, as well as rates starting to rise, you're starting to see even better relative performance out of BlackRock. And they're a manager that, again, focused on producing income, a little bit biased to the fixed income space. Again, really part of this theme of instituting a little bit lower risk within the portfolio, but generating good absolute returns to kind of support what are lower return expectations within the fixed income market. In terms of managers, I just wanted to point out two things that did take place during the quarter. So Jackson Square announced that they've actually sold their 49% minority position was sold from Macquarie to a group called Affiliated Managers Group. This is a private equity firm that owns pieces of several investment managers around the country and around the world. We do not deem that as any type of negative for Jackson Square, so we're not recommending any type of action there. And then Wells Fargo announced in January of 2021, or excuse me, February of 2021, that they're going to actually be selling Wells Fargo Asset Management to two private equity firms, Reverence and GTCR. At this point, we do not deem this as any type of negative transaction for Wells Fargo Asset Management, and so are not recommending any actions on watch list. Nor are we recommending any actions based upon some of the near-term underperformance with ClearBridge, Boston, or Invesco. So second kind of bullet point under my section is investment manager watch list, and we're not recommending any managers go on the watch list based upon either firm factors or performance factors at this time. So let me stop there, see if there's any questions or if I lost anyone along the way. Okay, so if there's no questions there, before I touch on investment policy, I just wanted to pull up February just quickly, just to kind of give you an update since we're meeting a little bit later in the quarter. So 2021 got off to a kind of a bumpy start in January. We had some good equity market returns, and then kind of some fears over rising interest rates caused a bit of a market sell-off in late January. We saw pretty good recovery into February, and that recovery has actually continued into March, where we're seeing some still very strong year-to-date gains. And what I would say here is, quarter to date, this really has held true, where value continues to outperform in the U.S. and internationally. What we continue to see is kind of our U.S. allocation kind of keeping up with our policy index, some pretty significant outperformance within international equity. And then, fixed income's essentially trying to play defense right now in what's been a tough interest rate environment, while real estate and multi-asset with BlackRock are producing some strong returns. So add all this together, we're right at around 11.5% fiscal year to date through February. That number is going to improve as long as we don't see any significant change towards the tail end here in March, and still well ahead of our policy. So again, I would say we have gotten off to as good of a start as we could expect, both for the fiscal year and here in calendar year 2021. I would also just point out, you see some really outsized returns from some managers here, like a Jackson Square, for instance. And we have tried to remain proactive here. So just last month, we were doing some rebalancing to meet payout needs. So we reduced Clarkston and Jackson Square just because of this rally that we'd seen in small caps. And so also making some similar rebalancing again across equities late in the year, just to make sure that we weren't kind of over our skis, so to speak, within equities if we saw a bit of a pullback. So again, right now, I think no further asset allocations are expected. Asset allocation changes are expected. We do anticipate receiving our capital call from IFM probably somewhere in mid 2020, maybe in 2021, possibly into the third quarter of this year. And that will be kind of the last new asset class funding at this point. And we'll kind of continue to evaluate with the investment committee through the rest of this year if there's kind of anything else that we should be looking at. But this kind of goes to the third bullet under my section under investment policy. This was something that Kevin historically had always included on here. I do not have any recommended changes to the investment policy statement, nor do we have any recommended changes to asset allocation, but certainly want to open it up if there's any questions on those documents or any performance that you've seen today. Okay, great. Well, with that, Steph, I'll turn it back over to you and the board chairman.
Sure. Thank you, John. As usual, great overview and good to see the really, frankly, solid numbers. And, I had some concern in real estate. Really good to see that we're well positioned there. So thank you. And I will turn it back to you, Jenny.
Thank you, John. I think we're in a pretty good position at this time due to the climate of the country and investments and such. So appreciate everything you've done for us.
Absolutely. Thank you all.
Okay, I'm going to move out of the agenda order and we're going to go ahead and go to agenda item 6, which is legislative update with Jackson Walker. Alicia, it's all on you.
Of course. Okay. Good morning, everyone. So Shirley asked me to just kind of come and give you an update. We talked about this a little bit at, I guess, in the January meeting, maybe, but give you an update as to where we are now in the legislative session. I do want to remind you that I'm just providing this as a legal development. We don't represent TESRS on legislative matters or as a lobbyist. So this is just updates for your information and we can discuss. So I really just wanted to highlight a few pension bills. We are, I guess, about midway through the session. The bill filing deadline has passed. So we kind of have a good look at what's been filed so far. And now still too early to see what may get passed and what may actually make it through. But wanted to give you some updates on things that had been filed related to pensions. I think you have a handout in your materials and that doesn't need to go on the screen, but I'll kind of follow along in that order. So the first one I'll touch on is Senate Joint Resolution 22, which we talked about last time. This is the constitutional amendment that would prohibit the use of state funds to pay the obligations of a local public retirement system. As we talked last time, it's unclear whether in the language of the Constitution, whether this would actually apply to TESRS or not. Shirley had reached out to Senator Huffman's office and has received some clarification from them that this is not intended to impact TESRS at all or TESRS funding. So I think, Shirley, they indicated to you that they would they intended to put something in the legislative history or amend the bill to the extent it continues to move through the process. So there haven't been any updates so far. I don't believe this has been scheduled for a hearing yet. So something to watch, but good news from the sponsor that, it's not intended to impact TESRS. So moving on, House Bill 867. This is a bill filed by Thompson. So this bill is related to quadros, which some of you may be familiar with, but a quadro is a qualified domestic relations order. And so typically TESRS has received these historically for a division of property in a divorce. And since 2018, it's been unclear in Texas whether a quadro could actually apply to a public or to any retirement system, public or private, for spousal maintenance or for child support. And so the intent of this bill is to make it clear that a quadro may apply to spousal maintenance or child support. And what that means for TESRS is, if you were to get a quadro that requested that TESRS pay spousal maintenance or child support from a benefit to a member, we would still go through the process of reviewing it. And there's been some discussion among public retirement systems about how this bill would impact Chapter 804, which Chapter 804 of the Government Code is what allows TESRS to review a quadro and make sure that it can be administered by the system and that it satisfies state law requirements. So our understanding is that there will be a floor amendment offered that will clarify that this bill does not intend to override any of the provisions in Chapter 804, that a public retirement system, still has the ability to review the quadro and make sure that it can be administered under the system. For example, that a payment would not be required to come out of the system before a member retired, or things like that. Those are things we look at in a quadro. So this bill has actually already been gone through committee and was reported favorably. So this one's picking up some traction and may actually go through, but we're waiting to see how the amendment with Chapter 804 will play into this bill. So the next bill, House Bill 4566, this really, it looks like what this bill is doing is trying to give the Pension Review Board a little more authority to enforce any kind of law that requires a public retirement system, that has a requirement for a public retirement system. So it really just, it gives the Pension Review Board enforcement authority. So there's not a whole lot to this bill, but I think that's they haven't had a whole lot of enforcement power in the past. So that's the intent of this bill. This one I do not believe has been referred to committee yet, so it's just in filed status. And then House Bill 3898. There was a bill passed in 2019 that was related to funding policies, requiring public retirement systems to adopt a funding policy. And I know you all went through that process. This amends that provision that was put in back in 2019. And for local retirement systems, it would require them to work jointly with their governing sponsor to develop these funding policies and to update them. I think one of the big changes that might impact TESRS is under this new bill, the system would be required to provide a copy of the funding policy to every active member and to every retiree. So, that would be from an administration perspective, that would impact TESRS. Otherwise, the rest of the bill is related to changes to the funding soundness restoration plan. And a lot of these have been discussed by the PRB in the recent months, just tightening up the requirements for the funding soundness restoration plan. So I'll stop right there. Those are kind of the big general pension bills. I'm happy to answer any questions if you have any. Otherwise, I'll move on to the investment related bills. Okay, so the first investment related bill, Senate Bill 1372, this again was a bill that was passed it was related to a bill that was passed in 2019 that required all public retirement systems to have an investment evaluation done. It looks like the intent of this bill is, I don't know if you recall back in 2019, there was some discussion of whether your existing investment consultant could perform this review. It's intended to be an independent review, and there's been some discussion in the last couple of years about whether that's really the intent or appropriate for your existing consultant to perform that review. It looks like this would limit that ability, that you would actually need to go find another investment consultant to review your investment policy. It's periodic, it's not every year, every few years. But there's for example, in the bill, it requires that the investment firm that performs the evaluation was not involved in developing the investment policies or strategic investment plans of the system, and is not involved in directly or indirectly managing the investments. So, we'll see. That's what it looks like the intent of this bill is. That would be a change from the way that the statute reads right now. But again, this bill is just filed, hasn't gone anywhere. So we'll see what happens with that. The next two bills, Senate Bill 13 and House Bill 2189, are, and really Senate Bill 1158. These are all investment related bills. They're similar to the bill that was passed in 2017, I believe, related to investments regarding companies that boycott Israel. These instead deal with companies that boycott certain energy companies and social media companies that censor political speech. So they're structured very similarly to the companies that boycott Israel bill, where it would apply to TESRS. It applies to the statewide systems, and there's certain divestment requirements as well as notifications to managers to determine whether you have these holdings and whether you must divest from them. So, I think these potentially could have a big impact on Texas retirement systems across the board, particularly social media. That's going to pull in a lot of the Facebook and Twitters and all of that. So, again, to be seen what happens with these, but those are out there and have been filed for now. And then the last investment related bill that I've seen is House Bill 4563. This is relating to consideration of pecuniary factors. So this appears to be based on a recent DOL rule. The Department of Labor earlier in late 2019, I believe, came out with a rule that is really for ERISA purposes, requires fiduciaries of retirement systems to really focus on the pecuniary factors, those that materially impact risk and return, rather than some of these other factors, like there's a big an ESG trend, environmental, social, and corporate governance. So this bill appears to be, excuse me, modeling after some of what was in that DOL bill, requiring that that certain state investments have to be determined based solely on pecuniary factors. So that is what that is that bill. And I think that's all I have on that one. So those are the investment related bills. Again, some of these have been referred to committee. Some of them are still just filed. So too early to know yet which ones will gain any traction, but I'll open it up to questions if you have any on those. Okay, and then the last three, I just kind of listed these topics. There's quite a few bills under each of these different topics, and so I won't go into all of them. As we discussed in the last meeting, there are these public safety related bills where a presumption for a line of duty, death, or disability may apply for a public safety, for a first responder or public safety employee who contracts COVID, that it would be a presumption that they contracted it in the line of duty. So this, again, as we mentioned last time, this is not amending any of the TESRS statutes directly, but certainly could have an implication, something to consider. It would not change your process. Right now, your local boards make the decision as to line of duty, death, or disability. So nothing really directly impacting this, but something that, we want to be aware of and may want to make local boards aware of if this actually goes through. On Texas Open Meetings Act, there's been quite a few bills filed, and I know David, helps you all on that side of things. There's been quite a few bills filed as far as whether these virtual meetings may be allowed on a more regular basis, even after the COVID suspensions lift. So I think there would be certain parameters that would be required by state law, similar to what's been in place now, recordings and two-way communication with the public. So like I said, there's quite a few bills out there on Open Meetings Act, and we'll see what happens with those. And then the last topic is, Public Information Act. This really applies more to staff and the board and responding to public information requests and the timeliness of that. And so there's a few bills out there as far as, a governmental body's response to that, or certain amendments to the Texas Public Information Act. So just things to watch. There's a lot that's happened in the last just couple of weeks, the last few weeks of the filing. But those are the ones that we wanted to highlight for you all. And if you have any questions, I'm happy to answer.
Alicia, what is the filing deadline this year?
I believe it was March 12th.
Okay. So now we just have to wait, see what hits calendars.
That's right. Yeah, we should be
Okay.
through the filing, and we'll see what now gets through committee.
Okay, any questions from anybody for Alicia?
All right. Thanks, everyone.
Thank you so much. I appreciate your work.
Of course.
Okay, without any further ado, where's number 5? Executive Director's Report. And who is our Executive Director? Shirley, you're muted.
Right, can you hear me now?
Yes.
Okay, and because I'm using a separate computer, I'm not going to be able to share my presentation, and I regret that, but it's in your binder, in your packet, and there's 3 things that I wanted to talk with y'all about. The routine, more or less quarterly assessment of our system activities and the financial activities of the system. Wanted to give y'all a final update on the compliance project that we've been working on and some of those outcomes, and then have some discussion about our participating departments and a look at how a training plan might help us get through some of those compliance issues. On slide 3, the activities that we've been working through since really since the start of the session with House Appropriations, Senate Finance, and the House Pension and Investments Committee. And the committees are starting to move into their formal meeting process where we will be in attendance, but there's not a presentation from the agencies. Some of these meetings, I know there were a couple of them, one yesterday, one today that was canceled, but because it's competing with other activities that are going on. So I think that we'll just keep up with those, the rescheduling of those formal hearings, and then be in attendance whenever they're ready. We're continuing to work remotely with 1 or 2 people in the office every week. Because of the nature of our work, we don't have members that come to the office. If at any time that usually it's only happened a few times that I'm aware of, and since I've worked for the agency, and it's been because somebody's just in town and they dropped by. There was one department that they were going to be in town and wanted to have a meeting with us, and we facilitated that, and it worked out well. But for the most part, we're just not. We don't have that type of. We don't need that type of office presence. I think that we're all very productive because of the lack of some of the distractions, even from working in the office, that can come up. The governor had a conference call after the governor's office after his announcement from Lubbock about the no statewide mandate with regard to wearing masks. But there was this during the conference call, it was very, there was a lot of emphasis on personal responsibility to wear a mask and to practice social distancing, but that there was no longer a requirement for the mask. The question came up about for agencies that have staff working in the office, and there are some agencies that require that. They need people present in the building. So he was questioning whether he could have a policy as the head of an agency to require masks, and they said no. But that you can strongly encourage your employees to wear masks. So that said, we're going to continue to work remotely. We're in the office to work through the hard mail that comes in and the paper checks that come in. And obviously that's an important function that we're not going to lose. We don't need to lose. We're continuing to have a lot of virtual meetings, just like with our board meetings. We have meetings, GoToMeeting, and we have the ability to share screens through an application at work with each other. So that helps facilitate our working together and our collaboration. We're continuing to have virtual meetings with departments. I think that helps not only for us, it's very efficient and very effective. Just like with board meetings, I think Shana mentioned to me that it costs about $6,000 for the fund to have an in-person meeting. And it's been sort of an eye opener. And I think that's why you're seeing the bills come through about open meetings, and because I think there's so much support for how effective and efficient that meeting virtually has proven to be. But our meetings with departments, I think that helps department participation as well. So I'm glad that we're doing that, and we can do a lot of them as opposed to making in-person visits. The other activity that, of course, has been keeping us busy it's the annual reporting season for our departments. We've had several things that have made this reporting season unique and more difficult for departments, with local board meetings being scheduled through around COVID, and with the winter storm that hit Texas in the middle of February. Generally, somewhere around the middle of February, as a routine, was when a lot of our departments were scheduling their board meetings in order to approve reports and submit reports. And I realized that's a universal problem, and it's going to be a universal factor in a department or a local board's ability to submit a timely report. In our rules, I can't extend the deadline for a required report. There's no provision for that. Even though in years past, in many years, several years ago, it was assumed that we could do that. A lot of departments got used to it, but in accordance with the rule, we can't extend a deadline, but we can have a waiver for administrative. They can request a waiver for the administrative penalty for the late report, and it requires a written request, and that request has your reason for the late report has to be due to, it was beyond the control of those responsible for submitting and preparing and submitting the report, and that it was not due to negligence. And so it became, you know, I felt like it was fair and it would be quick, and it would be a lot easier process that if we had a form for that they could, all of the requirements of the rule for them to submit a request for the waiver and state their reason for the lateness of the report were there on the form, and it can be, you know, it could be approved or denied. And I also, because I can't change a deadline, I asked that they give us their deadline for submitting the reports. And so there's varying dates now for those that did complete the form. But I think that's using that form for the request of the waiver of the administrative penalty, I think is going to work out, and we'll probably use that in future years.
Shirley, how many outstanding people do we have now that have not submitted their annual reports, and what's the importance of the annual reports?
Right now, the last time I'm going to see if I have it in here. On slide 9, the report that's late in March is the annual report of qualified service. The required report for to certify the roster, the MRR, that requirement, because the last month included on the MRR is February, we need it certified in order for billing. The MRR really is kind of a twofold. We look at for two purposes. It's the pre-bill, which we need 5 days before the end of the month for that to be certified, but it's also a certification of the roster. It's like, yes, we've enrolled everyone who should be enrolled, and we've removed those who are no longer with the department. And so the MRR, certification of the MRR is technically not late until the end of April. So we're going to have to come up with a process about that and take a look at the MRR, not only, you know, as a pre-build, but also as a certification of a roster. And
how many people do we have outstanding at this point?
With annual reporting, we have 51 departments. This was day before yesterday. 51 departments that have not submitted. We've approved 146, which is about 74%, 75%.
Okay.
And we'll be working with these 51 and let me make one little footnote on that. Our fax machine, the last fax that we received was March 5th. And Jessica and I have been working with our support with Vintage to see what's up with the fax machine. I found out yesterday that the incoming fax comes in through to a server there then it pushes the fax to the cloud to come to rest on our on our system where we can work those faxes. And he said there were about 30 faxes that they just weren't getting pushed through. So I'm hoping that 51 is not quite as big a number, but we'll be working, obviously, I want to start next week with, if you don't have a waiver and you don't have your report in, then we're gonna need to start assessing those penalties and with an invoice, and then giving them the form to tell me that it's not due to negligence or some other factor, that there was some factor that's why that the report was late, and which that may be true. I want to welcome Tamika. Did she have to leave, or Tamika?
No, she's still.
There you are. Tamika, Hobby, she's our new employee, but she came in January. And I think she's got some really good experience. Tamika, you want to say hi and tell the board a little bit about yourself?
Hi, I'm Tamika. I actually have 14 years of experience with the state and 13 with the Department of State Health Services in compliance and kind of accounting work with the Texas vendors who were participating in the Texas WIC program.
Well, thank you.
Well, welcome
I-
aboard.
Thank you.
Yeah, she's working as a benefits specialist and becoming familiar with departments. Of course, she came in annual report in the whirlwind of annual reporting, and I guess it's a good way to to learn how we interact with our departments and our local boards and with the requirements of the system. So I'm really glad she's here, and she's also a great editor. I think I've dubbed her our editor-in-chief. I wanted to, on slide 5, this is a discussion about the benefit payments and the contribution that we received. And if you look at the expenses for the second quarter, they were up a little less than 2%. And if you look at, and our retirement benefits were up. But we're still working through sending notification to vested members that they have a benefit. We're mailing out batches of letters to those vested members with a benefit statement and an application where they can see how much their retirement check would be. And if they want that, they can fill out the application and send it back. With regard to our revenue for the first couple of quarters of this fiscal year, I think our contributions are up a little, and in terms of and we're kind of on pace for having about a 4% increase in contributions for the fiscal year. One thing that is that I wanted to make note of, because it has to do with our exceptional item in our legislative appropriation request for additional state dedicated funds to pay for that, which we use to pay for benefits once we receive that state funding. And you can see that our allocation for 2021 was $1,196,000, and it was low. It was lower than what it was for fiscal year 20, because when we did the 5% reduction, it was a 5% reduction for the biennium that was done last summer. So we just concluded the first year of the biennium. We received the allocation. It was I'm trying to remember now, Wayne. It was maybe the 1.3 million, but then it was reduced. We had already spent the first year portion of that, and so they took the 5% out of the second year. So 2021 took a double hit, and that's why our state contribution for 2021 was so low. If we don't get our line item request for $110,000 back into that fund, we'll still start 2020 with more money allocated to us by the dedicated fund than we started off here in 2021. If we do get our line item request, then it could be a significant change for us, and we're going to remain hopeful about that. Did y'all have any questions about the expense, the benefit, the expense, and our revenues? Okay, well then the system to statistics will have to do with how many departments and how many our active members and our retirees, and everything's more or less stable. We've had one department come in, only had 7 members, but I want to make a note about that. On slide 7, you'll see our recruitment, compliance and recruitment activity for the year. We've been doing a lot of online presentations for compliance, and I think that's I think that pays off. We've actually had some pretty good results. I'll tell you about in a minute. But on slide 8, the online compliance meetings that we've had and the recruitment visits that we've had, I wanted to make note about Williamson County ESD 1 that came into the system. And this was our first department to come in with paid employees that were not participating in another retirement system. They were well aware of their eligibility to also be in TMRS, but they chose this system. They came in at $490 a month per member. That's the highest contribution rate, I guess, that we've ever had in the system. But as paid employees, I think that the ESD wanted to have a viable retirement for their employees, and it makes me I'm curious that if there's other whenever we're looking at employees coming into the system that are not participating in another public retirement system for the same service, would it be, would they also come in at these higher rates? And of course, that's probably a discussion that we might need to talk to Mark about at some point, about when we start having departments come in at these really high rates, and how does that, of course, it affects our contributions that we receive, but I guess that we would want to be sure that it's obviously better for the system if they come in at $490 a month when they're 21 than when they're 54. So, but at this point, we do have our first members who are actually paid employees, and who selected us, which is we were, we wanted to have that. We wanted to be sure that they were aware they were also eligible for another system, but no, they wanted to be in our system. Like I mentioned earlier on slide 9, annual reporting and the waivers, we've gotten quite a few waivers, and a lot of those have complied with their deadlines, and I think everything's good to go. But a lot of I think of the 51 that I mentioned, we have 3 that didn't make their own deadlines, and we'll be looking at all that next week and trying to have our process together for administrative penalties. The last thing I wanted to mention, to talk about how in our compliance work with our departments, and this goes back, I've worked compliance with departments since I started in October of 13, and we've gone out, we've had really detailed, intensive monitoring visits with some departments. We've worked to help reconstitute local boards, and it's been focused on what local board members and the governmental entity and the chief members of the department, what people aren't doing, and I think that there's a better approach. I think that we need to focus on what do they know and what do they not know. And it's time. It's been too long, and we've had a lot of changes. We've had a lot of rule changes, and we push it out on MailChimp. We put it on our website. We've sent letters, but I think that we need to have a better approach to be sure that our member departments know who to contact. And that they have a resource that they can go to on our website or on YouTube to look at a training module on, okay, now I'm a board member. What does that mean? What do I do? And breaking, if you look at local boards, there's several topics within local board that if you try to go through all of it with a department, which we have, it's just a lot of information to absorb and assimilate and work through and know what your next steps are. So starting in April, I think we really need to keep targeting these the departments that are going to be under administrative penalty and working with them to get their annual report in, get it complete, and because it's member qualified service. And it's the most important piece, I think, of what we need to be doing with these departments. And then because that way their benefit statement's correct. If they're ready to retire, if they transfer to another department, I think it's very important to get this qualified service done and in the system. And during April and May, I want staff to start developing a training plan. How can we roll this out? Who's the audience? How do you break? What are the topics? The little chapters, the sub-chapters under the duties of the chief, the local board, enrollment. And if we can have those as modules available on the website, whether it's a PowerPoint video, and it's a video, or if it's a PowerPoint with a voiceover, I think that we can, and that way new departments can be referred there. We can have, if there's any questions about a particular aspect of the local board, then they can be referred there. They can go pick it up whenever, if they have a question, they can find it. And we can also, in June, I'd like to, once we get at least a piece of this developed, more or less pilot the concept and have a couple of online training classes where we invite board members from several departments to come join a Zoom and go through kind of that basic module about being a local board member and what it means, because we've not placed enough emphasis on that. These are the people that serve on our local boards are trustees. They have requirements, statutory requirements they need to fulfill, and responsibilities. And a lot of that's really been beefed up in the last rule change. And they don't know what they don't know. So I think it's our responsibility to make this available to them, and I think it will improve over time. It will improve compliance, because there will be a resource that all they have to do is click on it to learn what they need to be doing. That's my presentation. Does anyone have any questions?
I don't see anybody having any questions.
Okay,
Thank you. Let's move on to agenda item number 8. Authority to request for proposal for actuarial services, discussion and possible action. Shirley?
Yes, we've discovered that we will need to have a request for qualifications, which I think we last did in 2016, Shana, 15, 16. But it's time.
Oh, that one's for outside counsel.
Oh, Jackson Walker.
Mm-hmm.
And while those contracts are approved through the Attorney General's office, we still would need to do that request for qualifications. And there's a proposed timeline in the letter as to when that would happen.
Is this for outside counsel or is this for an actuary?
Outside counsel.
I think
Okay.
we had this one posted for actuarial services.
Oh, I'm so sorry.
Because I think,
It's an RFP, not an RFQ, right?
I'm sorry, yes, I'm thinking it was an RFP for
This is, I'm
actuarial
sorry.
because John,
I'm sorry.
or FinLaw is on their last
Their last year.
extension.
I think yeah. We have quite a few that we need to be working on. We'll have to have at the next board meeting, and I jumped ahead. Yes, it's the actuarial RFP.
Okay. And am I correct in saying that we've extended FinLaw a year and now we have to go out for another proposal? Is that correct, Mark?
No, the current engagement was initially for 6 years. And this is the 6th year. So there was no extension involved.
I thought you loved us enough to just let us extend, but hey, okay.
I think that was done at the end of the prior engagement, but this one was initially a 6-year engagement. That was Don Shipman thought that it should have 3 actual evaluations in it. So that was his I think his input on the process.
Okay, let me ask you, because I can't remember anymore. When is your contract deadline? What is your contract deadline?
It dovetails with the fiscal year, so it's
Okay.
it's of August.
Okay. So I guess at this point I need to call for a motion to issue an RFP for the actuarial service.
This is Jared, or I'll make a motion to approve going out for an RFP for actuarial services.
Okay. We have a motion on the floor by Jerry. Can I get a second?
I'll second that.
Second by Ed Keenan to issue a request for proposal for actuarial services. So you got something else on your plate, Shirley?
Yes. Yeah, yes, I'm sorry. I was
Just
trying to-
yes, okay.
Yes, we do.
All right, does anybody have any questions or discussion? We have a motion on the floor. All those in, Shana, could you call roll, please?
Nathan Douglas,
Nathan Douglas, yes.
Edward Keenan,
Yes.
Jerry Romero.
Okay.
Rodney Riles,
Aye.
Stephanie Wagner.
Aye.
Madam Chair, 5 board members are in favor of the motion and 0 are opposed.
All right, thank you. Okay, now we can move on to Chief Financial, agenda item number 5, Chief Financial Officer Wayne.
Good morning.
Good morning.
I'll just kind of reference your board binder on page 58 is the non-appropriated budget for FY 2021. This is as of February the 28th, the end of the second quarter. And to date, y'all have spent 45% of your budget. So you're about halfway through the year. A little bit of the detail for actuarial services, total paid to Red and Wisdom is approximately $92,000. That second line item looks a little inflated at 301%. That $38,000 was paid for the experience study, and there's not a line item in your budget, so I just had to plug it in somewhere. For annual audit services, we are at $19,000. We just received an invoice for the final $1,000 a couple of days ago, so it's not included in this report. For Jackson Walker, to date, we've spent about $12,550. And of course, at the last meeting, y'all had approved an increase in the budget, which is not reflected here because it's in the third quarter, not the second. And for, of course, ANDCO's charges, they are right on track at $37,500 for mid-year. So with that, is there any questions on the non-appropriated budget?
Wayne, this is Jerry. On the actuarial or the legislative studies, it was a 38,000. You said that was a one-time. Is that a one-time, or is this going to be a consistent charge on an
That was a
annual?
one-time charge for the experience study and the review of the assumptions.
Okay, thank you.
Just to add to that, that's to be every 5 years.
Every
Mr.
5
Romero.
years. Okay, if there's no questions on that, just moving really quickly to the appropriated budget. To date, we have spent right at 47.8% or $1.5 million over both of our strategies. And, you know, the appropriated budget is mainly the staff salaries and operating the office downtown. So, you know, again, we're mid-year and, you know, at 50% of budget. Do I have any questions on appropriated budget? If not, thank you for your time.
All right, thank you, Wayne. I don't have any questions for him. So having said that, I think I'll find my paper, sorry. Agenda item number 9. Future agenda items. We have GRS report to the board with the actuarial audit. Approved to request qualifications for the RFQ for outside counsel. Overview of the pension review board's training requirements. And Denham Group will be speaking to us about cybersecurity again. Discussion dates for upcoming board meetings. I know the governor has lifted the mask mandate and has opened up the state to 100%. However, there are still concerns about meeting in person, as Shirley mentioned earlier. At this time, I would like to continue doing virtual meetings at least until August. I would prefer, like everybody else, I would prefer to go in person and see everybody. But due to the pandemic, it's still looming on us. We do not have enough people vaccinated. I think we need to just stay with virtual meetings at least until August. Unless anybody has any concerns or has any opinion otherwise. Having none, does anybody have anything else that they see that needs to be added to the agenda for the next board meeting, which will be the 3rd Thursday of next month?
Just to note, the 3rd Thursday of next month is April 15th. And I do want to make a statement about the training with regard to Denham and cybersecurity training. We're required for the board to have 2 hours of cybersecurity training. I believe the deadline is June. And so through these, our Thursdays in April and May, and it would probably be best for the training to be in closed session, kind of maybe even if you wanted to do it as a special meeting, a couple of special meetings to knock it out. If it's in closed session, then the board has more latitude to ask, specific questions of Denham with regards to cybersecurity for the agency and for the system. With that, we can have a closed session within a regular board meeting, or we may need to have a couple of sessions, a couple of meetings, and go into closed session to finish out the training.
I know it probably is a little inconvenient, but I would prefer to do closed session on another day other than like we did with the hiring committee, do either a back-to-back or pick a special day to do just the cybersecurity training in a closed session meeting. That would be my thoughts, because a 2-hour session or a 1-hour session of just cybersecurity and sitting in front of your computer all day long, this is just my opinion. Y'all can jump in anytime you feel like it. But it's my opinion that we get a lot done in our meetings. However, sitting in front of a computer for an extra hour for cybersecurity could be a little bit not mind numbing. Anybody else with an opinion? Ed?
I agree, Jenny. I mean, you just go brain dead after a while.
Could we space it so they're not back to back?
Well, since it's just
2 days in a row.
Yeah, absolutely.
And provide enough notice to accommodate, I can't speak for everyone, but my calendar is so booked. Even the set 30-day notice sometimes is, if we can just space it so it's not back to back 2 days, and then just provide enough notice to make sure that we have it blocked out with plenty of time to not create. I just want to be able to attend.
Madam Chair, I agree with Stephanie in regards to the timing. If we could get the remaining board meetings through August and any other additional training, back to back, that'd be great, because I need to put it on my calendar as well. It's hard to do when you've got, a couple of weeks notice and you've got other things that are going on, and you're going to have to kind of start playing with the calendar.
Would you prefer 1-hour blocks or just knock it out all in one sitting?
I'm fine with the prior day to the meeting, having the training sessions and getting that out of the way over the next couple of months. I just like to have it on my calendar.
Okay.
And I would prefer an alternate week, because it's really hard to block out that much time in 1 week because of, day jobs. So if we could just stagger it to an alternate week, so it's just 1 day.
I agree 100% with that, what Steph said on the separate to the weeks, but 2 different days.
And I think that we'll be able to do that, and I'll get with Jessica and Denham and see how we can, there's there's quite a few Thursdays between now and June, so I think that we'd be able to stagger it and have a meeting that you go into closed session like you did yesterday, and knock out, maybe over the course of 3 or 4 extra sessions, see how their curriculum works out. But I think it would give y'all the opportunity to engage Denham about any concerns or anything that they would need to report to the board.
Is there a particular, tell you what, Shana will send out an email on, Shana, if you don't mind, I'm going to impose on you here for a second. If you could send out an email to all the board members on which days and times would be most advantageous. I know Matt and Pilar prefer Wednesdays. Just for this particular meeting, we can do this. Maybe at lunch, we could all have our own little lunch party, have snacks while we're talking to him, knock it out for an hour on one day, and then the next month, knock it out for another day. We've got 2 months, we've got several months to do this just for the security training, is what I'm saying.
Hey, Miss Moore, Nathan Douglas, can I interrupt real quick?
Yes, sir.
There's been another important meeting that I've been pushed off on for 30 minutes. Can I leave this one?
Yes, sir. We're just at the agenda and we would still have a quorum. Is that okay, David? David, you're muted, sir.
Yeah, we're fine. You can go ahead and
Okay.
take off.
I appreciate it. I'll see y'all soon. Anything works for me. Life is Zoom now.
Thank you, Nathan.
Thank you all.
Yeah, we'll have a closed Zoom meeting. I don't like to go to meeting. It doesn't work with my computer, but that's a whole other issue. But if there is a specific day or time, I'm free and clear pretty much anytime because I'm retired now. So we'll work with Shayna and Jessica to see when all the parties can be together, that it make it easiest for the most. Is that fine with everyone?
I have one other question, maybe regarding cybersecurity.
Yes, sir.
Is the tabletop portion they do in the training, is that only done at the staff level? Is that something that is ever pulled together with the board or not? Or how does that work on the tabletops?
Good question.
Jessica, do you have any comment about that?
I would have to follow up to see what the course description is. Usually we would separate staff with the board, but I'll definitely follow up.
Okay, thanks. I was just curious if that would be something possibly part of the training as well.
Okay, thank you.
Okay, so Shayna, you have work. sorry to dump this on you and Shirley and Jess, but it's something that we need to do. Okay, so cybersecurity virtual meeting. Anything else that anybody needs to add to the agenda for next month, the regular agenda? Having said none, I think we are done with this meeting. Can I get a motion to adjourn?
I'll make that.
I'll second.
Ed Keenan motion to adjourn. Rodney Riles second. All those in favor? Aye.
Aye.
Hi.
Motion carries. We are adjourned. Thank y'all very much. Check your emails. We'll be sending stuff out.
Y'all have a good weekend.
Thank you.